So next we're going to talk about how Heikin Ashi candles are calculated. So Heikin Ashi candles are calculated on these 4 factors. So the open of the candle body, this is based on the previous bar's open price plus the previous bar's close price divided by 2. This is where we get the average open and general identification of whether the candle is going to be green or whether the candle is going to be red. We also see the close price. This is the closing part of the body. The current candle's open, close, high and low prices are added and then divided by 4. The highest value amongst the open, close, and high values of the current bar. So whatever the highest price was, that will be the high. And then the low. This would be the lowest value amongst the open, close, and or the low value of that current bar. Just to keep things simple, here's a cheat sheet, and it's color coded. And as we see, each aspect of the Heikin Ashi candle is based on an average, with the exception of the high or the low. These are really just the extremes of that particular time period. It's still useful to know what the highest price was on a given candle or the lowest price on a given candle was or is. But generally, it can be useful to know, think of opens and closes as averages if we're looking at the bigger picture or the overall trend and indicating whether or not price is moving upwards, if the averages are moving up, and we'll see green candles in that particular instance, and if the averages, the average open and the average close, are going down, we'll see red candles. Now let's talk about using Heikin Ashi candles. So green Heikin Ashi candles, these generally indicate an uptrend. Green candles with no lower wick indicate a strong uptrend. That's something that is not particularly too common. So if we do see these green candles with no lower wick, that's a sign that the general trend is moving upwards. Price is moving upwards strongly or fastly or quickly. Long green candle bodies indicate strong bullish pressure. So the size of the candle itself also gives credence to that general trend, how strong the trend is. We see the inverse with red candles. Red candles indicate a downtrend. Red candles with no upper wick indicate a strong downtrend. Prices are generally falling and not breaking past those averages. And long red candle bodies indicate strong bearish pressure. The selling pressure is strong. Prices are falling, maybe rapidly, depending on the situation on that particular candle or time period. Now, candles with small bodies with a upper and lower wicks, these are commonly referred to as doji candles. These indicate a trend is losing momentum and a pause or a reversal may occur. We'll take a look at an image of that in a second. Now, longer wicks and smaller bodies tend to be stronger indications of a trend shift. So what we're looking for here in both of these examples is when we're starting to see longer wicks on the above and below and a very small or narrow body. So here's our example of this. So generally we're seeing these. So before this, we're seeing these strong green candles, fairly large body, upper wick, no lower wick. We're starting to see signs of a lower wick here. And this is our first indication of a doji candle. Very small or narrow body and extreme candle wicks. This is a sign, particularly when you're looking at Heikin Ashi candles, this is a sign of a possible trend pause or a trend shift or a reversal where this move is starting to lose steam or lose momentum. Now, not always will these particular candles produce a trend shift on the next candle. It's just something to keep in mind of that there's a possible pause, and this is where you would start to use other indicators or other technical analysis means to really give credence to, like, hey, is the market turning around? Is there going to be some sort of reversal in the near future? This is just one tool or one sign that could possibly indicate that. In this particular situation, we see that we did not see a complete reversal here because price continued to go up. We do see two red candles here, so there is a short-lived break in this overall uptrend or this upward movement and price. And around here in this highlighted area is where we start to see the full-on reversal or the full-on trend shift, right? We produce these new highs, this particular swing high here, and this is a particularly large upper wick and large lower wick with a small body, and we see that continue on the next two candles. Really, we do see a color shift from red, so indicating that the average prices were starting to decrease, even though in relation to the candle before, even though they were generally in the same area, right? Generally in the same price range. Overall average price starting to decrease from the candle before it. We're starting to see the same from the candle before that, and then overall this was a sign of the trend shift to come, where we do see prices fall from this point onward, and with generally large red candles, particularly here with these large lower wicks, indicating that selling pressure is strong or increasing. Now here's an example on the Bitcoin daily chart. This is something that what we're looking for as traders that are possibly using Heikin Ashi candles. Here's just one example. Long red candles indicate the downtrend. We're seeing that this is a strong downtrend. So this is the time to short. This is not the time to buy or long the asset. This is the time to short or sell the asset. These long lower wicks show signs of buying pressure during the downtrend. So there are signs where price is coming down and is overall bouncing back up to its average, right? We're seeing the averages begin to consolidate in this particular range, whereas the lower wicks show that price did at some point come down to here. Now, the only way for price to come back from this low back to this area is for somebody to buy it, right? So this is signs that there is some sort of buying pressure. There is some sort of support level at this level. So this is something to keep in mind. People were buying along these bottoms, along this general downtrend. So even though the overall selling pressure was strong, we're starting to see these wicks form, and this gives signs of that buying pressure, that there is a potential bottom in this area, which did hold true. Generally, price was fairly choppy. There's a term in trading, particularly when price of an asset is staying within a tight range and is not volatile in any given direction. Particularly here, it's called trading chop. So we do see an instance of chop here. We do see some sort of indecisiveness, right? And we even see that with the shape of the candles, particularly here. Small candles, small bodies with larger wicks on both sides. This shows us this is a sign of indecisiveness or by the market. Particularly here, we see it here as well. Here as well, it started signs of indecisiveness. The market doesn't know exactly where to go. There is no clear direction as of yet, but a move is coming. Now, on the flip side of things, we see these long green candles here, here, and here. These are indications of a strong uptrend, especially when there is no bottom wick. When we see these upper wicks, strong, long green bodies, these are indications of the strong uptrend, strong buying pressure. Now, once we reach to the top area over here, we start to see these small candle bodies again. This is an indication of indecisiveness or a potential trend pause or shift in the trend. And we did see that this did hold true, right? Here we did see this potential pause here. This could have led to a a general trend reversal in late October, early November. We did see new all-time highs produced, but generally following that, there was a significant downtrend. So this was a sign that, hey, maybe the previous trend, this previous strong trend throughout October was beginning to wane and weaken over time. And really just looking at the shape of the candles and the general indecisiveness was a sign of things to come.